Hello and welcome to day number 82 of our Travel Trader series. And today I want to talk to you about something that is deeply ingrained into the markets. It has to do with human psychology. Many people that I was talking to were asking me, okay, do you think the markets will really fall further, or are we already at the bottom? And I would like to give you an explanation out of human psychology so you can see why I have my opinion and why I think we haven't seen the lowest point yet. So basically, when we are talking about a feedback loop, we are talking about a system that amplifies itself. So because someone made a certain experience, they now think that that experience will be predominant, and therefore they expect these things to happen again. That pretty much explains why markets are going up and down, and why we always have these kind of trends, which is what we talked about very early in these days. So we have a trend that is defined as higher highs in terms of an upwards trend, or lower lows in terms of a downwards trend. And why do these things happen? Well, let's start with a positive example. So let's assume prices go up. So now we get a feedback loop of prices going up. They are correcting, they are going down, but we still have in our mind for the last few, let's say, weeks or months, prices were going up. So most investors think that these prices will go up. So at one turning point, they come up again, and then they have that feedback loop. So you see now prices are going up. So you think that the prices will go up further, and then you go back into the market or you buy more, and that reinforces these upwards movements. And that's what is creating these trends. So actually, if you have a look at trend and trend following systems, they have a lot to do with human psychology. Now we're on the other side, going down. So we had a drop, and now we start to kind of go sideways and find a bottom. However, our latest experience as an investor, as a trader, is that it actually is going down. So the feedback loop will tell us, okay, we're going down. Now, if just something happens, some bad numbers are coming out, we start to go down a little bit, people get afraid because their latest experience, so what they still have in their head is, oh my god, we are about to crash. And then they will start and sell things, or they want to go short, which would be the same, but they will throw away shares. They are very risk adverse, and due to that feedback loop, it's self-enforcing. So we have a system that self-enforces it, and therefore we tend to go down, even though under other circumstances we would have had the same news, for example, in an upwards market. We might have gone down slightly, but the overall bias would have been, we're going up, and we would have gone up eventually. But right now we are kind of still in that fear mode. We still haven't seen all these impacts happening, and every time we see an impact, let's say the foreclosures of small and middle companies in Europe, for example, over the next few weeks and months, and people afraid of losing their jobs, people having less income because they don't work actually, and all these kind of things, they will reinforce each other, and we still are biased in negative thinking. So lately we went down, so we will expect and reinforce that system, and that's the actual reason, psychological reason, why I think and why it's very likely that markets will go down, because we don't change our inner workings at all. So it's very likely that we will go sideways, maybe even a little bit up, but as soon as some bad news hit, we will see another drop. But eventually, like when we see, okay, the drop is not that hard, we cannot fall forever, of course, but when the drop is not as hard and we see, okay, now the time where we are going up is getting longer and longer, we get another feedback loop, like, okay, it's not the end of the world, not every company will go bankrupt, my companies are still earning money, economy will go upwards again after all these things with coronavirus are over. And then we will get a different feedback loop that tells us, okay, now we're going up. And then later on, even if something, let's say a negative would happen in terms of I don't know, a company that doesn't bring the numbers that they're supposed to do, we wouldn't drop dramatically again, because our new feedback loop would be, okay, yeah, we're going down for the day because that company will, of course, lose some investors, but the overall bias is going upwards. So that's the reason why we see these kind of trends and why we are able to make money in the stock market. So we're very thankful that we know about these kind of things. Just wanted to give you another explanation for what I already said yesterday, and still saying for a while now already. As you can see, if you follow the charts, we are still in that downwards movement, still in that downwards trend. Unless we see a change in trend, we will still be in that negative bias. If we would see that trend, we will then turn around. You will see what we will do here in our little trading series, and then we will go exactly the other way around and make our money on the upwards. Right now we are biased as everyone else, and we think that we rather can make more money on a downwards movement. However, we will have a close look at it and adapt our trading style. So thank you very much for watching today. A little bit different, as it has just a little bit to do with trading. It explains some of the phenomena we see. And tomorrow we are back with having a look at the markets and get some more education, so we can accelerate and bring your trading to the next level. Thank you very much for watching. Have a great day. If you have any questions or any suggestions, please let me know in the comment section. Otherwise, have a great evening, and we will see you again tomorrow. Thank you and goodbye.